To the Adventures in CRE Audio Series. Join Michael Belasco and Spencer Burton as they pull back the curtain on everything commercial real estate and introduce you to some of the top minds in the industry. If you want to take your skills to the next level and be part of a growing community of CRE professionals across the world, this is for you.
Hello and welcome back to the Adventures in CRE Audio Series. I'm your host, Sam Carlson, joined once again by Spencer Burton and Michael Belasco. And we've got a very special guest with us today, JP De Bruin, who is a senior investment broker with a fast-growing and entrepreneurial brokerage in South Africa, which is going to be, the topic today I'm really excited to hear about because it's maybe not quite in the box. We're talking about, crossing borders and a lot of cool things like that. So JP, thank you so much for being with us here today.
Samuel, thank you very much for the time, and hi once again to Michael.
So JP, thank you so much for being with us here today.
Samuel, thank you very much for the time, and hi once again to Michael and Spencer. I really appreciate the opportunity to share some insights with you.
Yeah, it's going to be great. So to kind of kick us off and get us started, why don't you just kind of give us a little bit of an introduction to you, what you do, and a little bit more about you guys.
Yeah, sure. So my name is JP De Bruin. I'm based in Johannesburg, South Africa, and I've been in and around with the commercial real estate game for roughly about 7 or 8 years. And I really actually started with it in the same role that you guys would know as an appraisal. I went to go and study a Bachelor's of Science in Real Estate with the sole purpose of becoming a valuer, as we call it here in South Africa. And I did that for about 2 years, really learned the ropes with regards to writing reports, understanding the financials, and doing a lot of the valuations for listed sectors and the banks. And it really sparked my intrigue with regards to what is possible in history. And I always, I guess, subconsciously entered it into to start investing in my personal capacity. And about 2 years later, I realized there was an opportunity to get involved in the investment and the sales side, and I took that opportunity, joined a crowdfunding platform in 2015 with the name of Wealth Migrate, where with that I actually started helping South Africans or local investors here start building international portfolios, more specifically raising equity and capital to acquire medical office buildings, and spent about a good 2.5 years with them, learned quite a lot, and was quite a fast track but really exciting. And after that, started to I pursued more an opportunity to get involved in the local brokerage to get a little bit more exposure to the front side and the deal making. And it's been an absolute blast up until now, and just loving every second of it. I can't imagine myself doing anything else.
That's amazing.
Yeah, no. So JP, we've known each other now for several years, and one of the reasons I really wanted him on the audio series is he has a very interesting perspective around cross-border investment. So while in his current capacity, a lot of what he's doing is local to South Africa, he has some experience investing across borders. And so for JP, for you, and to provide some context maybe for our first question, just to kick this off, Michael and I get emails all the time from accelerator readers, A.CRE readers, accelerator members who are non-US based. And they ask us, hey, what are the differences, nuanced and maybe not so nuanced differences in underwriting US property versus, say, UK, Australian, Japanese properties? And I know that's a very broad question because every jurisdiction is going to be quite
Sure.
different. I worked 7 years in Central America. I'm very familiar with Latin American real estate. And so there are local nuances that I know you can't get into, but high level, what would you say are kind of some of the main differences that you see between underwriting in the US versus underwriting in say, South Africa?
Very good question, Spencer. And I would actually try to break that down into, call it, 2 phases. Now, the one thing that we will always look into is more on firstly, before you get into the property side, is understand the macroeconomic factors at play and understand the dynamics within that whole ecosystem. We need to understand, before we go into the property sector, we need to understand how the different economic factors really influence and what's contributing to, call it, population growth and GDP. So for that sense, we always, before we look into going into a country, we want to see, listen, what's the stability of the currency? And after that, strong independent job growth and economic growth from different sectors we will then actually start looking a little bit closer under the lens. So from that, before we look at any kind of properties, we just look at what's the trading history and what's happening in certain global economies at the moment. Do you want to be exposed to a certain kind of currency? What are the risks attached to that? And once you've actually ticked that box, we will start going into on the property level. With regards to the different nuances from a property level, I actually in my final year in my undergrad, I had a lecturer in property investments, and he had a famous saying in class that property is property, meaning that although there's a lot of intricacies, but the fundamental core reasons on how and why we invest in real estate is pretty much the same. Like if you just take residential for a simple reason, you're going to buy a house for the sole purpose of tenanting it and earn a rental income and hopefully sell that for a profit. Now, if you go onto the commercial front with indifference, typically do actually tie up with regards to whether that's South Africa, the States or Australia. There are certain tick boxes that need to be met before you actually look at taking on a deal. So I would say with regards to the difference of various countries, you have to understand a little bit more on how the businesses operate in the sector, what's the nuances with regards to using the imperial system and the metric system, specifically going into the development side. That's more important with regards to the costing of it. And if you make assumptions on suppliers from costing certain materials and it's actually quoted in very different things, you can actually run into a little bit of a brick wall in the sense. So I would say with regards to it, fundamentally, a lot of the things are actually quite the same because properties have the same kind of role that they fulfill in a society, whether that's within the western coast, eastern coast of America, or in South Africa. The utilizers of property, the utilizers of property actually use it for the same functionality, if I can call it that.
Yeah, and that's quite comforting. And the reason I say that is my experience is the same. Property is property is property. Yeah, there's nuances in terms of demand drivers. There's some terminology differences, but the fundamentals are the same. And so if you learn to underwrite real estate in one jurisdiction, much of that is transferable to other jurisdictions because the fundamentals don't change, right?
100%.
Yeah.
And what I would say just with regards to that is that I think the most important differentiator is just the rule of law in any kind of jurisdiction, because I think that might be the fundamental differentiator between markets is how does it interact with local and national government law and legislation. And I would say that's probably the biggest differentiator in my opinion.
And JP, actually, really, this is a question, Spencer. As you're looking into, cross-border outside of your country, and you mentioned law and the legalities around investing, owning, developing real estate is probably one of the biggest, differentiating factors. How does somebody from across the world get familiar with local, jurisdiction or local laws, and how does somebody get familiar and get comfortable with that idea when you're about to go invest somewhere or you're trying to get comfortable around that? How do you guys do that?
Spencer, you want to go first?
You talk to people, right? I don't think a complicated answer, but so you find a competent attorney, you sit down and you ask them to describe the lay of the legal land. And as you begin to explore what options exist to you, you continue that dialogue with legal counsel, and they help you understand what pitfalls might be coming that are different from what you're used to. JP, any other thoughts?
Yeah, I was going to actually touch on it, and my first response was going to be it's all in the numbers, and to mind the pun because of the game we're in, it's more in the sense of the volume. You have to actively interact with the people who are in the daily market and actually make a living out of it, whether that's a broker, a town planner, as you said, an attorney who's actively involved in drawing up contracts. You need to actually actively communicate with those people, understand, listen, what do they find actually in their day-to-day as challenges and opportunities? From perspective of a South African guy, we at the moment quite inundated with a bunch of opportunities because of the risk attached to it. But I always say, don't go and always just listen to the guy who's coming to say, listen, you have to actually look at investing offshore. Go and speak to people who's got to do with whether you invest in a country or not. Speak to the people on the ground. we've got a common saying, it's all about the fog, or the feet on the ground principle. People can actually, you can get somebody to say, listen, yeah, it's a great opportunity, you have to do this now, but go to somebody who's got nothing in it for you if you're whether invest in that market or not. Understand how their daily opinions change based on the interactions of the dynamic in those markets. And I would say it doesn't have to be complicated. It's just get a feel for, as I said, what the people feel in that market who doesn't necessarily have something to sell to you.
Yeah, that's a great comment. In fact, that reminds me, anytime you go into a new market, you shouldn't do it yourself. Right? You find a local operating partner who has that experience, and that's not unique to cross-border investment. You're going into a new city within the country that you're used to investing in. Oftentimes, finding a local partner who understands the lay of the land is going to be crucial. When we went to Panama, we found a local operator who helped kind of flatten the learning curve, so to speak. And so that leads me actually to my second question. Maybe it's somewhat similar to what Michael asked, but there's a learning curve to any new market, JP, as you well know. What are some tips for flattening that learning curve? What are some things that cross-border investors can do to kind of speed up the process to which they can get to market?
Sure. Once again, it's all about actually getting involved with a team bigger than yourself. I would always say, once again, comes down to the volume. Go to networking events, go to looking at different opportunities, look at as many offering memorandums that you can get your hands on. Speak to brokers, speak to financial advisors, speak also whether they invest indirectly or directly into property. I would say in today's day and age where information is so readily available, the more the better for you. I mean, they always say 2 or 3 bets are better than one. But I suppose if you can actually put yourself in so many rooms with people from different perspectives, you are just going to pick up things quite quicker and learn. And as you said, shorten or accelerate that learning curve. So for me, it's about quantity and getting through a volume of things while in the back of your mind having at least a established criteria or objective what you want to achieve, without deterring quickly what people actually deliver over to you. So for me, it's just get out there as much as possible and learn from as many different points of views in the market to understand the different nuances from, as I said, different points of view.
So maybe a related question. We're talking about investing cross-border, but what about those who what's some advice that you can give to them? Someone who, let's say they're in South Africa and they want to go to work in the UK. What can they do to make that a reality?
So from my personal experience, it comes down to also, it's a simple thing that I always say, be interested. Don't rock up and don't know anything about a country if you're going into an interview. Be able to talk about something that interests you in that kind of market. Understand maybe the local culture, what attracts you to be there, what makes you want to be there. Understand the daily news and movements in trends in that kind of market that also happens on a daily basis. I think if you say, listen, I just want to work cross border just for the sake of actually gaining experience, so I will go to Mexico, I'll go to Paris. I think that's the wrong approach. Understand something where you can resonate with, understand a little bit more on what's the daily side from a news perspective, what influences those markets, and really try to be interested so that you can just have a casual conversation as opposed to having a stiff conversation when you should go up to an opportunity with regards to an interview. I think property is as much about property as opposed to really about people. It's really about a business, about people. And if you are relatable and you actually understand a little bit of the dynamics and nuances on a superficial level, I think you might get your toe in the door a little bit quicker as opposed to a lot of candidates saying, we just want to go because we want the international experience. You have to have some form of subconscious attraction or reality wanting to be there, or a reason that attracts you to that either interview or opportunities.
Great. So, bringing it back a little bit to you as the investor, when you're looking into a new country or, a new area, what are you looking for? What are some of the things you look for, sponsor or GP? And how do you find that type of group?
So are you referring to if I'm a South African looking to invest offshore, or anybody looking to invest in offshore?
Yep. Sure. Yeah. When you come to the United States, how do you find the right partner, local partner?
Well, firstly, once again, it's understanding. So, why do you want to invest in a certain market? Like, and understand what's your criteria for doing this. If you then understand, like, listen, I want to be here for a stable cash flow, and I'm going to go into long-term leases. I'm probably not looking for high-yielding assets, but stability that will immediately direct your 30,000-foot camera on what kind of markets you're going to go into or direct into what kind of sectors. Now, as soon as you've established the kind of sector that you want to get involved in, obviously you then can dig a little bit down about the players, who's involved with that. But if a sponsor or a GP comes across your table, for me, what's more important is from a foreign investor, I would like to have somebody to have a really laser-focused approach to what they do on a daily basis. So I would prefer looking at somebody who's got a niche skill or a niche, can I say, day-to-day activity. So somebody focusing on just either multifamily or just the industrial sector, or somebody just focusing on the healthcare or MOB sector. So I would rather approach somebody who's got a laser focus and has a strong track record, as opposed to something. Okay, there's a big firm and they do multiple things. I look for somebody who's got a bit of a niche and a real strategy to derive value, as opposed from different players in the market.
Yeah, we're all shaking our heads in agreement here. I can imagine you're going into a jurisdiction you're not as familiar with. You want a specialist in the property type of choice. So I guess a follow-up question to that is, it sounds like you've done medical office outside of South Africa. Are there other property types that, in your experience, are especially attractive to, say, South African investors looking for outside of South Africa?
Yeah, so I can just interesting with regards to that. My first experience or exposure was with regards to the States was the healthcare and medical office building sector. We did a couple of condominium developments in Brisbane. We were exploring markets for the buy to rent in the UK. I would suppose it really depends on the investor in itself. In my capacity for the last 12 months, where I've been focusing on local investors, I found guys who did offshore investments, and obviously touched upon that because I've got some interest. I find that people invest in the sectors and markets that they are comfortable with. I've got a couple of private equity firms here that they are specifically focusing on large white box industrial properties with long, just taking that same formula and trying to see where they will fit it in, where the fundamentals really lie up. I suppose it's about familiarity with the investor. Like, specifically, if I can take an example, when we started in the multifamily sector from my previous company where we raised equity, it was a new sector as opposed to what we used to in South Africa. And we initially, on one or two of the projects, we actually positioned it as a very stable cash flow. But because of the short-term lease nature and the fluctuation possibilities on the management and the highly dependence on the operating jockey, we kind of learned a hard couple of lessons, in the sense that rather invest for now what you are familiar with and educate yourself about what's in the market and how does it differ from your local situation. So maybe just to sum up, I would say it depends on the local investor's experience and what they are comfortable with that makes them comfortable investing in the offshore.
I like that. And in fact, so I've been kind of sitting here thinking a little bit about how we started, and you talked about crowdfunding. I know maybe this is a little bit of a change in direction here, but I am actually kind of interested in that aspect of, because crowdfunding is, new, relatively speaking. And it sounds like you have had incredible experience and success with that. Would you mind kind of talking to us about how that process worked for you and kind of how it came about and developed for you?
Sure. So, that's actually how I got into, call it my first sales role, effectively, is raising equity on a global platform that a company with a name called Wealth Migrate created back in the day. Now, what we really experienced, this was the first fundamental, call it semi-disruption that could have happened to the CRE, like limiting the barriers, other than your traditional REITs that gave you CRE, like limiting the barriers, other than your traditional REITs that gave you access to commercial real estate, you can now directly invest into commercial real estate via a platform that offers you to do that from as little as $1,000. With saying that, I've also come to notice that obviously there's abundance of these platforms popping up. And with any kind of new thing or new trend or spur of technology, there are always the lessons to be learned and risks associated to that. What I would say with regards to that and the ease of making it possible to flow capital from border to border, investors really get inundated with a variety of opportunities. And sometimes you can get a bit of a overwhelming sense like, okay, no, I need to invest here because this is what they say. I need to invest with these crowds because this is what they say. I would say because of the ease of access, it's a higher risk of people saying, okay, it's so easy, I'm just going to do it and it will be fine. I think lessons that have been learned is like in any kind of thing is you still need to actually look through the platform and the glass and say, okay, but why? Who's this group who's coming to raise equity? What do they want? What are their track record? How did they get into the game? And why the need to go actually raise from the general public as into the, call it an IPO or listing as a REIT. So it's been a really interesting, that as soon as the investor gets a little bit more educated, he can make a little bit more of as I can say, an educated decision on where to go. So it's been a whirlwind with these technology coming about. But I think it's got a downside to it that there's too much information flooding from anybody because they have the capacity now to raise cash from anywhere around the world. I think it just puts more of a responsibility onto the investor to educate himself before he actually parts with any money to invest on a platform or a sponsor.
Well, it's interesting. So when it came out of, and it's usually the first one that kind of flops a little bit, and then those errors and those weaknesses come to light. What do you think the future of that is? Are people moving away from it now, or do you think it has more runway as people adapt and change? Is crowdfunding still viable, and do you see that changing in the future?
Look, I think the technology is here to stay. I think there's a lot of room for improvement in the sense of, call it the rating systems of, call it sponsors, and as soon as a little bit of a track history starts being built on exiting deals on these platforms, investors will actually form their own opinion, like, was this a worthwhile investment? Let's call it I invested with multifamily group A in San Francisco, and everything looked great. They prospected well. They had good stories. They had good fundamentals and why they're going to invest. But ultimately, if the sponsors or GPs don't really return on what they promise, I think it's got a reputational risk associated to it as opposed to back in the day where it was a little bit more private. So the technology is definitely here going to stay. It's, I suppose, the transparency that's going to come through in the next couple of years are going to be a major contributing factor to the allocation of capital in the longer run.
That makes a ton of sense.
Yeah, that's a good observation. I think the next conversation I like to have, we're talking about overseas investments, but South Africa is a very interesting market. Maybe we can talk a little bit about it, where you see opportunities in your markets. So I guess the first question would be: put yourself in the shoes of a foreign investor looking to invest in South Africa. Where would you go, and in what property type would you invest today? And in what property type would you invest today or over the next 12 months?
Very good question, Spencer. I'm not sure how regular you guys keep abreast of what's happening in South Africa, but because it's an emerging market, it definitely does come with its challenges. So in saying that, I would say when an investor comes here, he needs to also say, is he here for a short-term gain to make a quick profit because of the returns that are deliverable based on the risk associated to it? Or is it somebody's taking a little bit of a view and saying, listen, the country and call it the economic and political policy is basically on a longer-term upturn? I would suggest that they would rather really look at what is the big motivator for them to moving into an emerging market. Obviously, it's because of the opportunity. The fundamentals in the markets that still stack up on the local side is really on the industrial side. because of the same kind of fundamentals that fall in place, movement still happening in the industrial and call it the warehousing space. With regards to that, we also see a lot of traction with regards to the manufacturing sector, whereby in the GDP, that's been for the last 2 years actually one of the only sectors that's been contributing, can I say, beyond the median or beyond the standard deviation positively to the GDP. So I would suggest for a foreign investor is to really understand in what are they looking to gain. Is it a short-term return with a highly speculative investment just because of the returns that in that currency can achieve, or is it a bit of a longer-term play and saying, listen, we're going to look and saying, listen, there's growth opportunities here, there's emerging trends that actually can make sense in the longer run. So it's really fundamentally important for the investor to decide why is he coming into in South Africa. If he actually does have a bit of connections locally, there's a lot of guys who still actually, in the shorter run, making great opportunities in the residential space, like call it on the smaller scale, the multifamily equivalent to what you guys know, like anything apartment blocks up to about 50 to 60 units. There's a lot to be said in that sector, because at the moment, I can say the middle and lower LSMs obviously are quite struggling with regards to affordability, and there's a lot of opportunities with local landlords who are trying to actually release or liquidate some of the assets so that they can do it cross-border. So there are opportunities to be quite aggressive in acquisition stages and turning around assets with the right kind of management, if I call it that.
So are you seeing a lot of cross-border investment into South Africa these days, or what's sort of the appetite from outside investors?
At the moment, it's very limited because of what's happening on more of a political scale with regard to country. The country has been struggling a little bit with regards to corruption and trying to get that out. We've more recently actually elected a new president about 18 months ago, and while he's quite business savvy, the markets haven't turned around as quickly as they have expected. Over the last 9 years, the previous term were really actually affected quite badly with corruption. And he's done quite well to try and redirect FTI back into the country with a lot of great promises and prospects with regards to changing the infrastructure and actually upkeeping that to make it quite prosperous for new business to create. But from an FTI perspective, the appetite is quite limited into South Africa at the moment.
So what investment vehicles exist in South Africa? If an investor wants exposure to South African real estate beyond direct investment, of course, are there REITs? Are there private equity funds? Are there other vehicles that are common to that market?
So the largest, I would say, vehicle accessible to foreign nationals is pretty much the REITs. Our REITs are quite, I would say half of our REITs on the JSE or the Johannesburg Stock Exchange are dual listed. So they actually do have good opportunity for foreign investors to get involved. I would say private equity firms is more on the limited number in the sense with regards to, yes, there might be large private equity firms, but they are, I wouldn't say few and far between, but a handful of them that offer those opportunities. And that's more with, in my opinion, what I would say is more of a personal relationship in the sense that they understand the operators and the opportunities that can be derived from it. So I would say your biggest vehicle is a foreign national opportunity to invest in our local opportunities. So,
we're running out of time, but I'm really interested to hear your perspective on currency risk, currency hedging, the cost of that. In my experience, one of the higher barriers for a foreign investor to invest in a foreign country is the cost of that currency risk. How have you hedged against currency risk when you're looking at foreign investments? How has that played into the decisions that you and your investors have made? And any other thoughts you have on that topic?
Sure. The first thing I've kind of noticed in starting out and raising capital for locals to invest abroad is investors tend to react very emotionally or irrational on any kind of news headline that actually comes out. that our currency is very tied towards any kind of news headline that really comes up, and we might see a spike in the currency conversion, and people think, okay, now is the time because it's all doom and gloom, and they take as much as they can. And people, I find that people who, impulsively take money out, always take it out on the wrong times. People who've come to me and saying, listen, when the rand is strengthening, it's looking better, we're going to wait for the right time to actually take our money out. They also never find that space. And the guys who've actually done the best is actually saying, listen, I'm going to take money out on a consistent basis. Once every quarter, I'm going to send X amount of rands out and converting it either to US dollars or Great British pounds, and to actually just equate that and average out those costs. So I would say the biggest hindrance that I've been experiencing is people tend to overreact based on what happens in the markets, just to say okay, before everything tanks now, we need to take as much money out. But once again, as soon as it's looking a little bit rosy, they said, no, okay, we're going to bring back money. So I suppose it's the same with normal equity kind of markets. The general investors just react on the wrong timings, because investors in general on short-term or high liquidity opportunities tend to react quite irrational, in my sense.
So that's, during the hold period. So, for a lot of our readers who are coming to our site, they're looking, at the onset to underwrite or even put this in a financial model, so to speak. How do you manage, or do you, underwrite this currency fluctuation or the potential, or do you forecast currency in any way in your underwriting, as you are presenting these opportunities or as you're evaluating these opportunities?
Michael, I would actually say that we in a market, we only underwrite it and keep it within that currency. We're not here as Forex traders or Forex players. We try to understand if we offer opportunities on a macro level, we are going into market X, Y, and Z because we fundamentally think the economies stack up and the currencies associated risk is worth taking into that market. So we never try to, from an investor's perspective, try to forecast what the returns will be in the local currency based on a foreign exchange. So if you invest in a US dollar asset, we forecast our returns in the US dollar. We set up structures that they can either get paid out in that currency, or whether they receive their dividends in dollars, they can then actually take that to a trading account and convert that to what they do on a daily basis. But we implore our investors to keep it within the local currency and measure your returns initially based on that. Whether you want to see is up to your prerogative, but for the main reason, people invest in these countries to actually keep the money on that side and grow a portfolio there, as opposed to on a daily basis try and convert their returns on a currency exposure risk.
Yeah, and let me add a little bit to that, Michael. So you can hedge your currency risk, and there's a cost associated with that. And so, in my view, the best way to have an apples to apples comparison is, as JP said, you underwrite in the local currency, and then you apply whatever the hedging cost is to determine what the equivalent would be in your country. So imagine you are investing in South Africa. You would underwrite in using Rand, and let's imagine you underwrote to 18% levered IRR. Let's imagine there's a 400 basis point cost to hedge US dollar to Rand. The equivalent would be a 14% levered IRR in the United States, and then you would compare that, right? Now, of course, there are other risk factors that would go into that beyond just currency risk, right? When you're investing in a foreign country, there's some risk premium that has to be figured into that. But in my experience, that would be, as JP said, you're underwriting in that local currency, but then you're factoring in the hedging risk to provide an apples to apples comparison.
Just maybe to add on to that, Spencer, and that I believe there are other people who do that, but specifically for in local investors who have a primarily need to actually get their money out of the country, I rarely do find it that investors actually do measure their returns, what they would have had against the exchange rate. Because let's say, for an example, we have a deal and we raise, we're raising equity. We've got a 60-day close or a 30-day equity raise. Depending on when an investor actually takes his money out, he can then actually do it. But the project is actually going to deliver the same returns on when it closes. But let's say on a crowdfunding platform, we've got 150 investors. One investor, the first investor who invested $100,000 in the beginning of the equity raise might have gotten an exchange rate 15-1, and then something happened locally, and the guy who put in his last dollar actually put it in at 17-1. So it's kind of difficult in the sense to project that because of the different timings on when cash flows actually into a deal as well, if that makes sense.
Yeah, no, that's an interesting observation. I always think about it as a single investor making a cross-border investment, but when you factor in the case of crowdfunding, or not even just crowdfunding, private equity funds where you have multiple investors in the fund, risk is different. So that's very interesting.
Well,
we also kind of tell our investors, because when we like there's not a deal every day of the week to be done. Surely the deal of the decade comes every week, but if you've got the right criteria, it takes time to actually find the right one and deal. And we preemptively always tell investors, call it for the year of 2020 next year, and decide how much cash you want to actually take out, and then park it into a US denominated account until that deal is ready. So when you feel the best time is actually to take that money out, put it in a bank account or even a money market account, so that you can secure the best time, in your personal opinion, to actually convert rand into dollars or vice versa into other. So it's not always okay, the best deal is available now, we need to raise the cash. If people think we can take more out now on a sporadic basis, do that and just maybe park it in that currency in which you wish to invest as soon as the deal becomes available.
Well, JP, this has been absolutely phenomenal. Thank you so much for your transparency, for all the amazing insight that you provide. I mean, really a globalized, you've kind of opened our eyes to a globalized opportunity. So it's been really great. Thank you so much. So in parting, is there anything you'd like to, summary or any parting advice or words you'd like to leave with the listeners?
Yeah, Michael and Spencer, thank you really much for the opportunity. I thoroughly enjoyed this. And I would say maybe just the last piece of advice is, I believe self-education is the best investment you can ever make. Educate yourself so that you're not susceptible to any kind of advisor or one man's opinion. Be able to compare different people's opinion and actually compare to your own, so that you're not actually just blindly taking anybody's advice. I think in the day and age of information available, and platform that you guys do offer is actually a best tool to start at. The accelerator program, just starting with the fundamentals, is a great way to start educating yourself and understanding how investments work. And I think it's the best responsible thing you can do, is to educate yourself before investing in anything and understand your why and your longer term goals in undertaking any investment.
That's perfect. Well, thanks again, JP. You've been great. And thank you, everybody, for listening in. And we will see you on the next episode.
Thanks for tuning into this episode of the Adventures in CRE Audio Series. For show notes and additional resources, head over to www.adventuresincre.com/audio series. Would you like to learn real estate financial modeling in a matter of weeks and do it with zero guesswork? If so, the A.CRE Accelerator is for you. The Accelerator is a step-by-step case-based program designed to teach you exactly what you need to know and in the order you need to know it, so you can gain both the knowledge and experience to take your career to the next level. To see if the Accelerator is right for you, go to www.adventuresincre.com/accelerator.